G'day folks, welcome back to another update for Bitcoin and Ripple. They're both turning bearish. Now we did a market update across all those share markets a few days ago before the massive dip we had due to the trade war that's happening, or the tariff war between the US and China. So all the major stock markets have taken a hit. I'll cover those in a different video, but today we're talking about Bitcoin and Ripple specifically. They also took it, and they're currently bearish according to our indicators. So make sure you stay to the end. We're going to include some back testing. Make sure you hit that like and subscribe button to support the channel, but also reference the +1 videos for a deeper dive into our trading strategies. Now, in terms of the outlook as of today, October 14, Bitcoin stands at around 114,133 with a $2.27 trillion market cap and a 1.09% 24-hour gain, rebounding from trade war dips and predictions of 133 to 180,000 by year end. Bolstered by its safe haven status and geopolitical tensions like US-China tariffs and regulatory advances in Kenya. Meanwhile, XRP at 260 with a $156 market cap, $156 billion market cap, I should say, and 2.87% daily rise recovers from post-tariff shock, with SEC resolution and looming ETF approvals potentially pushing it to $4 to $6 by December, enhanced by international expansions in Dubai and clearer US regulations. So we always start with the long-term trend. We've got the weekly here on the left. You can see there we've got a bearish divergence on our CCI, with the CCI below its moving averages, and the price itself is just above the moving averages, so it's giving us a divergence. The weekly is still somewhat cautiously bullish, although just be aware of this bearish divergence. It may come down, and we've set a 23-38% Fibonacci target range there. And just for those new to the channel, the way we measure that is we go from that high and we take it back to the significant low before the divergence started, and that would have been that area there, and that's how we measure that 23-38%. And 90% of the time it touches at least this area. Other times it sort of consolidates in that range, and other times it actually falls right through, so we can't tell how far it's going to go down. I don't trade these. I look at these as potential exit areas to get out of trades if I'm going, in this case, if I'm going long. Now, so the weekly is bullish. However, the daily and the hourly are bearish. And if we zoom in for a moment, you can see the price is broken below the moving average band, and so is the CCI. So still in a bit of a bearish trend on the latest day of trade. And that was after that massive drop from the tariff war announcement, the US and China. And that happened to most other stock markets as well. Now, if we go to the hourly, and I've marked here as well where you would have gone long. If you're trading on the hourly, you would have gone long during that period, and I'll go to the back test in a moment. And from there, you would have started going short. Now, here on the hourly, we've got also a bearish momentum at the moment, both the CCI and the price broken below. Very narrow consolidation there of the moving average range on both the CCI and the price. That usually happens when the price consolidates, as it has done so in the last few hours there. But again, you would have gone short here, and what we look for is any divergence. Now, what we had back here, higher lows on the CCI versus lower lows on the price. And just to show you the Fibonacci retracement from that, we take back to that high there, the significant high. You can see there it broke into that range very easily, between that 23 and 38% range. You can see that perfectly bounced in that range, and then it's breaking again below that. Sometimes it breaks higher. Other times it just touches it and then goes further to the downside in other situations. So at the moment, bearish on the daily and bearish on the hourly. So in terms of a back test, what we look forward to, let's go to the long positions first. So back here on the daily, we're showing a bullish momentum when the price broke above the moving average band and the CCI started to rise as well. You would have gone long somewhere there on the hourly if you're trading the hourly time frame or intraday time frame. So you can see here, and I like to zoom out a bit so you can see the moving averages more clearly, as opposed to the, I always say, don't focus on the bug on the windscreen, just focus on the road ahead. You can see there the price started, moving average band started turning down, and so did the CCI, and you would have got out of any positions held at that point there. Then when they start turning up again making sure you're in an uptrend during this period, going long. And again, when you start seeing a bearish divergence like you did there on the hourly, you potentially still follow the price in this case, because you can see there the moving averages are still trending up, and then it finally breaks down the first indication of a real breakdown was when the moving averages curved down at that period there. That was your first warning, and then a second warning was there before it finally collapsed. So whenever you see a bearish divergence, start paying attention to where you might want to get out. So that was long positions, and at that point, had you got out at that point there, you might have had a position held there, but you would have got out there with a nice little gain. But also notice here you had a bit of a drawdown again with this bearish divergence. And again, if you could have got out, it's probably in one of these points there, but in this case it paid off, and you would have got out to either there or there if you're really conservative in your trading. Now since then the price has broken down, as I said, over the weekend, and that's where you would have gone short during that period. And what we look now is for the short positioning. The price is broken below the moving average range, and so did the CCI. That's where you've entered a position. Then finally we had a bullish divergence here, as we said, and you would have paid attention to that. That was your first, at that point there, you would have been your first indication of a bullish divergence. And in that case, the price did go against you in this range when you're going short, but then it finally dropped and you would have closed out with a nice little return. Now, at the moment, you'd be closing out, probably starting to go short again there, with the price breaking below the moving average range and the CCI also. Now, looking at Ripple on the weekly first off, we did have this bearish divergence, and it's been consolidating in that range for a number of weeks now. And we've drawn a Fibonacci 23-38% range there. Now again, last week it finally broke down further into that range. And you'll notice there as well, the CCI has been drifting below that moving average range. So that's a bearish momentum. And it's finally broken bearish below that moving average range on the price as well. So at the moment, weekly bearish movement. On the daily, again, going bearish from that period there. And we had a small range there to go long, and you could have traded on the hourly or the intraday during that period going long, and finally breaking down again below the moving averages on the price and the CCI to go short at that point. Now, if you're trading this on the daily, you'd still be holding it and possibly waiting for that CCI to touch the moving average range, and that gives you normally an earlier exit signal rather than waiting for the price to hit the moving average. That's on the daily. And again, here on the 1 hour chart, going short from that period, when again, I prefer to zoom out a bit on, we're seeing these moving averages on the smaller time frames, and you can go in short there where that arrow is indicated, and closing it out whenever the CCI touches the moving average band. You can see there that CCI touching the moving average band gives you an exit right near that bottom of that little range. So let it go. It's gone against you, it's gone long, but you don't trade long. You wait for it to break down again, because remember, you're trading in the direction of the daily, and you would have gone short again on that candle, drops, and in this case, let's zoom in a bit. Let me just. So where are we? Back here. It's dropped, and finally, you would have closed it out on that little candle there. So you would have had a nice few little pips in the short position there. Let it go. Now the price is still below the moving average, but don't be fooled, because this could easily bounce, and you might start seeing the price bounce as well. So I'd like to make sure they're both aligned in the same direction. Now in this case, we did have a bit of a rise on the CCI, and so did the price eventually as well. Then it finally broke down there on that point there. Yeah, you would have gone short there. Now, in this case, again, notice it's hit the CCI moving average band, and that's right near the bottom of that one there. And avoid going short until where we are at the moment, at that point, when it breaks below, and you'd be in a short position now. Let's go to that's on the hourly. Let's go to the back test. So again, going short from that period there on the 7th of October, and you would have ridden that little wave. You had a couple of little positions open there, and that returned some quite nice little trades in that range. And currently you're in an open position at the moment, and still open. To get some share trading opportunities, why don't you subscribe to the Patreon page? And this is the last, we started trading and tracking the shares traded since September, the middle of September recently. And that's what it's returned so far with closed trades. So to get access to that share trading with blue chip shares being posted each weekend, consider subscribing to the Patreon page. Thanks for watching. Hit that like and subscribe button, and we'll see you in the next update.